Hey guys, this is Jay with Finance. Hope all is well. This is my first video. Pretty much just, I think the idea of this sort of YouTube channel is just to go through my financial journey. Go through my portfolio. I guess changes over times. My mindset around investing. And pretty much all things related to stocks really. So as we can see, so I've got 25,000 at the moment in the portfolio, 3,000 cash, roughly. So it's about 20, is it 28,000? There we go, 28,000 total on this account balance. So as we can see, I started investing I think it's late December, lead into February. And as we can kind of see over time, I think, people obviously talk about emotional investment and stuff. During this time, the stock market wasn't, doing too hot, wasn't really investing too much, casually. And then, I started seeing some numbers, and then all of a sudden, I've exponentially increased, what I'm investing, reallocated money, which I will show you further on a little bit in the video, to this account, just to, I guess, speed up the process. So I think the first point for myself and what I want to, improve going forward, which I think probably many of you will, feel the same with, is to not always wait for the dips, because, it could just be going upwards more, and you could potentially be leaving profit on the table there, which I've done loads of times. If I invested all of this, which I did here, and I did it here instead, we could be seeing much higher gains, right? But hey, that's the whole part of the journey, right? Got two portfolios. Retirement, which is going to be my main one. I think the individual holdings is what I want to reduce massively. Way too much for my liking. I'll go into that a little bit more detail in a second. I guess I'll start off with my ETF portfolio and pretty much where I want to be putting most of my money going forward. So here we got 3 ETFs, realistically 2. I bought this on emotionally. I thought it looked good. It's still fine. It's not a bad one at all. Not a bad ETF to get. I guess the whole point is why I need it. I mean, I've got VUSA here, so there's no real point in having it. So I guess the future would be is to sell out of that one and put that money directly. I mean, it's such a small minority of my portfolio, it doesn't really matter, but the goal would be to sell out of that eventually and just put it straight into my VUSA stock ticker. The biggest gain though is obviously going to be the tech one. I've been investing quite a bit into this recently. I think before I was around £18, now I'm up to £20, close to, just from dollar cost averaging, as they call it, into it, just because it's been exponential growth, and there's been so much growth in this ETF, just because of the likes of Nvidia and such like that, which I've seen massive spikes, just due to revenue growth, due to AI, but also I guess what they would class as sort of the future, right, in terms of what they can grow to be, right? So there's been a lot of growth in those stocks. I mean, I think Broadcom has doubled just recently. It's hit massive, ridiculous heights. So there's been a lot of growth in that area, and that's something I definitely want to stick with. Obviously, if there's a massive IT crash, which who knows what could happen, I'm obviously going to be sticking a lot into the S&P, just because it's a bit more generalized, even though it is heavily still skewed to tech, which I don't know if it shows it here. I don't think it's going to show it here, but very much similarly, there is still heavy margin stuck on the tech stock, so there is going to be quite a bit of overlapping with that. But it's kind of how it is. I understand it. I'm fine with it. I think the more important thing is that you just understand if you're overlapping or not. I'm completely fine with that. Gives me a good amount of diversity within those, and I mean, as we can see, they've had pretty decent growths since I started putting money into them. I think what we at on this one, we are at, so we're at under 70 quid, 69 quid, that's what we like to see, 69. And on S&P, I think, like I said, we're just under 20. So completely happy with those two. Definitely want to rebalance into those more, put more money from my individual holdings into this moving forward. Cool. So individual holdings. going back literally like 2 weeks ago, this was a much larger spread. I've only recently just narrowed it down into 12 or so stocks that I want to invest in. I'm happy to increase that to 15, but before I had like 33 investments, and it was all over the chip shop. So realistically, the goal was just to narrow it down, add companies that I think will grow in the future, and just make sure, I guess, that there's a diversity within those. So Visa, we got Visa there, very strong standing. Apple and Tesla, I think there's a lot of room for growth. Same with Alphabet. And then we've also got some healthcare companies, some biotech, some sort of, retailers, etc. We've got REITs in here, similar Procter & Gamble, put in the same category as Walmart. So there's a lot of coverage there. We've got Zoetis, which I think is a little bit more I think they do like pet medicine and whatnot. Still a lot of growth within those guys, and I think it looks like a pretty decent stock from what I'm looking at. I think the two stocks that they were actually up quite a bit until I started putting a little bit more money into them recently, when I rebalanced my portfolio completely. It's Fiverr and Alibaba, two stocks that I guess I would consider, I don't know if high risk is the right word, but they're definitely more of the I guess less stable ones. I know Tesla jumps up and down often, but with these ones, they're quite volatile. They're not, especially Fiverr's not massively profitable. So there's always that in the back of the head that you never know what can happen. But we're staying the course. We were up quite a bit recently, and hopefully we can just continue to see more growth with this stock going forward. But I'm pretty confident. I'm pretty happy with it being in my portfolio, especially it being such a small minority. Because if we go over to here, we can see it's 1% of my portfolio, so no issues on that realistically for me personally. So yeah, that's pretty much the basis of my portfolio. I think going forward, as I've recently just rebalanced it, there's not too much I want to change apart from not adding any more. I don't want to add any more to this individual holdings. Going forward, purely want it to be in the ETF section of my portfolio, just because it's more safe. It's more safe, and I'm seeing greater returns from it. So put two and two together, it makes complete sense to me. Cool. So let's go over to this. Mind it looks shit, I know, but bear with it. It's a portfolio I made. It's a sort of a dividend tracking sort of portfolio tracking sort of application that I made on Excel. Use a bunch of things from the internet and put it together, and this is what I've got. It looks ugly, I know. I will be revising this very shortly to make this look better. This is what I've got at the moment. I guess the biggest dilemma, I've got 16,000 in cash sitting in Sage Savings, which is completely fine. I'm happy with. I want to have a decent cash position. Not this large. I guess that's where my issue lies, right? I guess my thought process is that if I move all this out now and put it into Trading 212, I'm going to be hitting my ISA limit pretty much instantly. So I guess you guys can give me your thoughts on this, whether I do it now, or I just slowly start seeping this into this whilst also playing my monthly, what I do, putting my monthly amount that I usually put in. So I guess you guys can give me your thoughts on that. I think overall, 44,000, not too bad. I'm 24, turning 25, getting old. But I think we're still at a pretty sweet spot in terms of what we got invested, what we have sitting in cash. I also have a little bit of cash position in my everyday banking account, but it's nothing really. It's like a couple of grand. But this is where most of my money's at. As we can see here, this is a total mess, I know. I don't think these are not even working accurately, right? But it gives me another look on what I can see as profit as percentages. I can see information. I put different highlights depending on how much you're in the green and whatnot. A good way just to visualize it. And then I've also got some graphs as well that I've made. I think the best thing to me is just to buy one, because as you can see, this looks terrible, but it does its job for what it is. And I guess you can kind of see how much the iShares and the S&P are carrying in terms of profit margins. I mean, it's pretty much visible here, right? I mean, we're up 2%. Obviously I would say these are much newer into my portfolio. So a lot of these haven't going to be growing over the past year and a bit, which would have been for the case of my S&P, because if we invested this in a year ago, we'd be up 20% on Visa, right? So it's not a direct representative to just say my ETF is out maneuvering it. But I think long term, S&P and VUSA, S&P and the IITU is where it wants to be in terms of putting my money. I think that covers most of it in terms of stocks and what I want to do. I think in terms of going forward, what I'm going to be, investing, usually it's around £800 to £1,000 I do a month. It really just depends on, what I'm budgeting for, if there needs to be any big payments or anything like that. But also, as I do work in sales, it also depends on if I'm getting good months and whatnot. So some months I could put in £2,000, some months it could just be £1,000. It really just varies, and it goes case by case. But I think minimum I want to be putting in every month is 800. But obviously, as my salary increases, which I think is the main thing with investing, is making sure that your actual money is improving. It's all good putting 800 a month, which is obviously amazing if you can do that. But if you can get more of a higher salary that allows you to put more in, then realistically you're going to see greater returns in the future. So there's two ways to look at that, right? Obviously, reinvest in dividends, put them, your 800 in, but then there's also exponentially growing your salary, which means you'll be putting more than that in. But yeah, I think that's really it in terms of what I want to show. There's nothing really here to show really in high detail. I think for the end of this year, we're going at the rate we are. I think, can easily hit 55, 60 grand in terms of total net worth if I keep putting all the money in. I think we should see more great returns than that. I'm in a pretty good position, I guess, in terms of my living situation and whatnot. Currently live with the mum, so there's no real housing costs that are massively draining, which not everyone's in that position to have, so I'm pretty grateful on that. But this is where I'm at, I guess, in terms of financially and investment wise. As I said, I've only been investing for about just over a year, seeing pretty decent returns. I think every day you're learning something new, a new tactic, a new whatever it is, right? But I think the biggest thing with investment is always just staying the course, not panicking when you see a stock drop, not panicking, if you see a stock climb, don't just panic, buy loads of it, just try and be as emotionally free with it as possible, as in emotionally withdrawn. But that's not realistic what happens. Very emotionally attached to your stocks, as I think most of you are. But yeah, I think this is it in terms of my first video. I hope you guys have had a nice little look and enjoyed the rambling, I guess, of my portfolio and kind of what I want it to be. Oh, that's very nice to see. Tesla's just got a nice little peak. This stock's always up and down. It's crazy. But yeah, something I want to stay in, I think, quite a bit. I think they've got a lot of things going on. Yeah, I think they can do quite well going forward. But yeah, hopefully you guys have enjoyed the video. Let me know if you've got any questions. Happy to, I guess one of the main things, if anyone wants to comment on, is what I should do with this. Another thing to put on this is Sage Savings is dropping their interest rates, even though the Bank of England's interest rates aren't dropping. So I don't know if they're squeezing margins. I don't know what's happening there. But I guess that's also more of a question as why I want to withdraw this money. But I don't know whether to put that into my actual ISA account, or maybe I should put some of that into a normal investment platform on here, or maybe I could even just do Vanguard and just put VUSA in there. It's completely fine. But yeah, let me know what you guys think. Hope you guys enjoyed the video, my first video, so do pardon the rambling. Any questions, feel free to drop in the comment section. Happy to talk. Cheers.